Hi everyone, my name is Maria Johanna Mio and I'm a student of MBA September 2023 IPMI International Business School. And now I'm going to share you about the corporate finance subjects lecture by Prof. Sembel MBA Ph.D. And here we go. Okay, before it, I want to explain about the corporate finance itself. So, corporate finance is a field of finance that deals with the financial decisions made by corporations and the tools and analysis used to make these decisions. Well guys, now I will to divide the corporate finance subject into 6 big parts. The first one is Introduction to Financial Management and also the time value of money. The second one is Capital Budgeting. The third one is Analysis of Securities and Portfolio Investment. The fourth is Capital Structure and the Corporate Restructuring. The fifth is Fraud Risk Management and Recent Issue in Finance. And the last is International Finance and Dividend Policy. Well guys, now we will start from Introduction to Financial Management. In here, we learn about the goal of firm, portfolio theory, and also the financial statement analysis. And this is the some part. And the next one, we'll learn about the time value of money. So, time value of money is a sum of money has a different value today compared to its value in the future. And we also learn about the rule of 72 that used to estimate the number of years it takes for an investment to double it in value at a fixed annual rate of return. And the formula is 72 divided 8%. And now we move to the second part is capital budgeting. In here we will learn some parts. The first one is net present value. The second one is payback period. The third one is internal rate of return. And the last is profitability index. Net present value used in capital budgeting to assess the profitability of an investment. And this is the formula. And we move to payback period, used to evaluate the time it takes for an investment to recover its initial cost. And this is the formula guys. And next is IRR, used to evaluate the profitability of an investment. And this is the formula. And the last is profitability index, used in capital budgeting to assess the attractiveness of an investment. And this is the formula. And now we move to the part 3. It's a analysis of securities and portfolio investment. In here we learn about the technical analysis and the fundamental analysis. So, technical analysis uses historical price and trading volume data to evaluate and predict future price movements of financial assets like stock, currencies, commodities, and indices. And it's like a momentum versus reversal, trend, uptrend, downtrend, support, resistance, gap, command, breakaway, measuring, existing gap, triangle, symmetric, and asymmetric, etc. And the fundamental analysis actually aims to evaluate the financial health, performance, and potential risks of an asset to make informed investment decision. And it's like a domestic and a global economic analysis, industry analysis, and the company analysis. And we move to the portfolio investment. Portfolio investment is ownership of a stock, a bond, or other financial asset with the expectation that it will earn a return or grow in value over time, or both. Okay guys, now we move again and again to the 4th part is capital structure and also the corporate restructuring. Capital structure is typically expressed as debt to equity or the debt to capital ratio. Meanwhile, corporate restructuring refers to significant changes made to the structure, operations, or financial status of a company. And in here, we'll also learn about the case study from LBO RGR Nabisco. And the core or the point of the case study is RGR Nabisco become a landmark in a financial history and provides profound insights into the strategies and challenges involved in the large-scale LBO transactions. Okay guys, now we are in the 5th part. So in here we learn about the fraud risk management and also the issue of finance. Okay, in the fraud risk management, we will learn about the triangle of fraud, occupational fraud and abuse, investment fraud, fraud prevention and detection, and the 7 financial shenanigans. Okay, the first one is the triangle of fraud. As we can see on the screen, the first one we learn about the opportunity. In here, it's like a weak international controls, ineffective control monitoring, and we move to the pressure. In here, the pressure. It's like a greed, addiction, poor cash management, and dissatisfaction with pay, overlook for promotion. And also the rationalization, it's like I'll pay back, I deserve a pay raise, it's for a good purpose. And then we learn about the occupational fraud and abuse. It's like corruption, asset misappropriation, and fraudulent statement. We can see in here. And the next one is the investment fraud. Investment fraud involves misleading individuals or entities into making financial investment based on false or misleading information. So dangerous. And also we can detection and prevent it. And the fraud detection and prevention, it's like organization use internal controls, segregation of duties, employee training, whistleblower mechanism, protecting security for hardware and software, and audits to prevent and detect occupational fraud. So don't worry guys. And we also learn about the 7 financial shenanigans. It's like this one. And the next thing that we learn in here is about the issue in finance. But actually in here, we'll learn from some books and some films, and we can make a review. But the point of this topic is how we can see the finance world. It actually can be happen from many perspectives. And now guys, we are until in the last part is about the international finance and dividend policy. So international finance is the study of monetary interactions that inspire between 2 or more countries. And we move to the dividend policy. And here we learn about the payout ratio, tax benefit, and dividend stability. So what is the payout ratio? Payout ratio is the calculates the percentage of a company's earnings paid out as dividends to shareholders by dividing total dividends paid by the company by its net income. And also the payout ratio tax benefit or advantage or saving provided to individuals or business due to specific provisions in the tax code. And the last is the dividend stability. It refers to the consistency and predictability of a company's dividend payments over time. Now we are in the end of this video. The last but not least is the biggest lesson learned that I learned from this class is that everybody definitely make mistake. So don't worry for make mistake as long as we get up again and fix it. So thank you for watching. I hope this video can be useful for all of us. Thank you so much. Bye bye.